Hi, Coach Kevin here. Today I'm going to spend a few minutes to go over some bookkeeping and accounting things with you and just give you a system, I hope, that helps you keep the books for your business as simply as possible. Obviously, there's a ton that could be said in this area. We could do 20 hours of training on a program like QuickBooks or Xero or others like that. But for most business owners, a simple spreadsheet system like the one you can see here is going to be plenty sufficient. So we're really going to focus on this system that we've developed, and we will link to in below the video so that you can add that to your Google Doc or wherever you're going to keep your accounting books, and we'll go from there. So, just kind of by way of introduction, I am kind of the nerdy analytic accountant brother on the team. I actually have a master's degree in accounting and tax, and before joining Dave and Mike full time in our entrepreneur businesses, I actually worked for a CPA firm for about 5 years, and also did an internship during college with one of the big four accounting firms, Ernst and Young. And I, of course, get tasked with doing all of our books and accounting and tax returns at year end for all of our various businesses. So I do kind of know what I'm talking about here. So before we jump into the spreadsheet, I wanted to quickly just go over kind of the main two reasons why this is important. Most people look at bookkeeping and accounting as a necessary evil, and that's fine. But it is a necessary evil. You have to keep good records so that you can submit all that information to your CPA at year end for him or her to be able to prepare your annual tax return. Or if you're doing it yourself in TurboTax or whatever, you got to know the numbers to be able to report that accurately to the IRS. But secondly, and much more importantly, accounting really gives you a clear picture of how your business is actually doing so that you can make good informed business decisions and make your business more profitable, because that's what we all want, is to make as much money as we possibly can. And the books, the P&L here tells that story of how your store is trending, and how your revenue versus your profit are trending, and looking at your ROAS, your return on ad spend for your advertising. Is it paying for itself and making money and contributing to the bottom line? You can't make good business decisions without good books. So we're going to try to show you, like I said earlier, how to keep good books as simply and as quickly as possible. This shouldn't be like a 10, 20 hour task every month. It should hopefully be more like a 1 hour task each month. And we've tried to simplify this system as much as we possibly can for you. Like I mentioned earlier, there are all kinds of different accounting options you could use. A lot of small business owners choose to use QuickBooks. I've used that for years and years and years, and like QuickBooks a lot. Over the years, we've actually started to use a free, kind of a slightly dumbed down but 100% free online version of QuickBooks, which is called Wave. If you go to waveapps.com, one word, you can create a free account, and it's very, very similar to QuickBooks, but it's just online and it's free. So that's another option for any of you who want to keep more in-depth books rather than just using this simple spreadsheet system. But for most people, especially when you're just starting out in business or in e-commerce, this one tab spreadsheet that we've developed here is plenty sufficient. So you'll see that it's just in this accounting tab of our ABD master where all of the books are kept. So today in this video, I'm going to be walking you through how this spreadsheet-based accounting system works. And like I said, we'll link to this down below the video so you can download and use it yourself if that's what you choose to do. So real quick, there are really four sections in this sheet. On the left side here, you've basically got your transaction log, and this is where we'll spend most of the time today because this is really what drives everything. So you've got your transaction log here. Secondly, we've put in black dividers between each section here, but then you've got your profit and loss statement, your P&L. And like it says here, this is 100% auto-generated. So it's just pulling all of your transactions here by the date the month you've selected, and it's just going to auto populate this P&L for you to tell you, how much was your total revenue, how much was your total cost of goods. Cost of goods sold is what COGS stands for. All of your advertising costs, and then any other expenses that you have listed here, and that just sums to what your net profit for that month is. So like I said, this entire section is auto-generated. The third section here is for tracking your inventory, which obviously ties closely to your cost of goods sold expense. And this section we will cover, of course, but keep in mind that this entire section is only to be used if you are purchasing inventory from your supplier and then stocking it either at your house, in your garage, or at a fulfillment center like Expert Fulfillment. If you are stocking inventory and fulfilling orders one by one from your fulfillment center, or even if that fulfillment center is your own garage, you will use this inventory system. If instead you are drop shipping from a supplier and just pay for each order as it goes out, then you don't even need to use this inventory system. So we'll get into that later on. The fourth section on the far right here is just to keep all of your historical profit and loss statements, which basically all you're going to do is once you close out a month, you're confident that all of your transactions have been recorded here in the transaction log, and you've generated your P&L for that month. Then you are just going to copy this entire section. So Control C, or if you're on a Mac, Command C, and then you're just going to paste those numbers into the appropriate month here in this section on the far right. But it's very important you do a paste special. If you just paste the numbers, then it's pasting the formulas, which are pretty complex and which is just going to mess things up. So you do a copy, Command C or Control C, and then instead of just doing a regular paste, you're going to right click and select Paste Special, Values Only, and that will paste. In this case they're all zeros, so it didn't paste anything in, but that will just paste the numbers into this section here. And that's just kind of important to keep a historical, you could of course go back and select, okay, what was my January, and then okay, what was my February, and what was my March, and it'll auto-populate that. But here in this section you can only see 1 month at a time. We want to be able to have kind of a historic, see the trends month after month after month. Your accountant is going to need this to prepare your tax return, obviously. But then if you scroll down, you'll see that there are actually a handful of charts that are auto-generated based on what's up here. So, it's obviously just some dummy data right now in here, but it's showing you a monthly revenue chart based on your total revenue numbers here. And then it's showing you here your monthly profit based on your net profit numbers here. And then a return on ad spend report, which is, basically just your advertising cost divided by your revenue. But anyway, kind of jumping ahead of myself. You'll see that I tend to do that a lot. But anyway, those are the 4 sections of the spreadsheet here. So now, let me spend, like I said earlier, most of our time is going to be on the transaction log here, because this is really the meat, the raw data that drives all the rest of this. But before I go ahead and start entering transactions, let me show you how these drop downs work. Because you'll notice if I go into month here, and let's say that I try to enter a specific date, January 3rd, 2020, you'll see that it won't even accept that entry because this is formatted to only accept a month. And then here I can't just go ahead and enter some random account. You'll see that it won't take that either because it's set up to only accept one of these predefined accounts. Now you're probably thinking, okay, what if I don't like your predefined accounts, or what if I don't want the months that you've provided? Well, all of that is controlled at the very bottom of the spreadsheet. So if you scroll all the way down to the bottom, you'll see here that here are all the month options. So if you get out to January 2022 and want that to be an option, you just enter that there. And then you'll see that up here I can now select, well, okay, it didn't like the way that I input that. It auto changed it to 1/1/22. So let's change it to be Jan 2022. And now you'll see when I go to actually select it that Jan 2022 is an option there. So, we've predefined all these months for you. Obviously, if you're starting to use this in June 2020, you don't need any of these, so you can just delete them. And, if you're OCD like me, you can copy and paste these up. You can do whatever you want down here to give you the options that you want. Well, yeah, let me just stop there. So that's how you select, that's how you specify what month options you want to see here. And then similarly on the revenue, or on these account options, here are your various revenue accounts that we've let's say that you wanted to, for example, keep track of your website revenue separate than your Amazon revenue and separate than your eBay revenue, for example. Same thing as over here with the months. You can enter anything you want in here, and those are going to be your options when you hit the drop down button there. So go ahead and make this accounting system yours. You don't have to just use these predefined accounts that we've created. Now these that are in all caps and grayed out, these are more of category types, not accounts. So you're going to want to leave these just to kind of keep things organized. But when you're selecting what account to use, never use one of these all cap category headings, because those don't auto pull into the P&L over here. So you'll want to, those are just for kind of organization, categorization purposes, but you're going to want to select one of the accounts within that category. So scrolling back to the top now, as you're entering your transactions, it's as simple as this. Let's start with revenue, because that's kind of the top section of the P&L. Now with revenue, you could let's just say that it's June 2020. You could just, there are a couple of different ways you could go here. You could do a separate entry for every single order number. And here's order number 1235, and here's order number 1236. If you wanted to, which I wouldn't recommend, you could do a separate entry for every single one. I made $28.12 on this one, and I made $41.10 here, and another $28.12 here. And you'll see that once we select the correct month in the P&L, if I select that June 2020, it's automatically summing all of the gross revenue lines that have the month June 2020. So it's if we look down here, you'll see the sum is 9734, and sure enough, it's pulling in 9734 here. You're going to end up with, you're just going to spend a ton of time if you try to record every single entry like that, and it's just really not necessary. What I would highly recommend for all of your revenue type entries is to just do a single entry. So I would just say summary from Shopify finances report. And you could, for June 2020. And so where you're going to get all of that revenue information is from what's called the finances or the finances summary report in your Shopify admin panel. So I'm going to link below the video here to this help article in the Shopify knowledge base, but it shows you, just in case Shopify changes how you access this in the future, this article should always get updated. But here's, within your analytics and reports page, you're going to see a section called finances, and you're just going to want to click on the finances summary link right up top there. It should always remain the first report within this finances box, and once you click on that, it's going to pull up a report that looks kind of like this. So you'll obviously need to select the current month that you're doing the report from, and then it's going to organize, here's all of your revenue information, which is really kind of all we want for this section, or for what we're doing right now. But it does break it down into how much was Shopify payments, how much was through Amazon, how much was through PayPal standard, so on and so forth. We don't really need that. Really all we want is this sales box right here. So if this is, if this was my store, what I would do at month end is select the current month that I'm reporting on, and then I'm just going to grab whatever numbers are necessary from right here. Now you could, if you wanted to, you could have an account for each one of these. You could have a gross sales account, a discounts account, a returns and refunds account. You wouldn't need this because that's just a summary, that's just the sum of these three. You could keep track of shipping revenue separately, sales tax separately. Some people want to just keep track of total sales. And not even worry about the breakdown. That's kind of up to you. What we've built for you by default here, if we look at this revenue section, is your gross revenue. You'll notice whatever is selected right now, it puts at the top rather than in its section. But we've got a gross revenue account. We don't have a discounts account. I usually just combine that with gross revenue. So if I were, let me just go through and say, if this were my store and I'm recording it this month. So I would come to my report and say, okay, 15,859.27. So 15,859.27. And then it's going to be minus the discounts, which are 0. But, let's say that you had some. You could say minus whatever. Okay, and there's your revenue, your gross revenue for the month, net of any discounts. But then we've got a refunds account, and refunds were $158 negative, and I am going to want to enter that as a negative. So I'll enter negative 158. I'm just going to paste that because this is all coming from that same report. And then, like I said earlier, we don't need to do net sales because that's just the sum of all of those. If you're recording shipping revenue separately, you could do a shipping revenue here. You'll notice I don't have a shipping revenue, and let's say that you make the decision to not set up a separate shipping revenue account. You're just going to want to add that shipping revenue up here to your gross revenue number. So $59 of shipping revenue. I'm just going to say plus 59. And I could make notes over here on everything if I wanted. I could right click and insert a note and say, okay, my gross was X amount, and then discounts were negative X amount, and then shipping rev was X amount. You could make notes for yourself of what that is, so later on you can see what you did there. Okay, so then we do have a separate sales tax revenue, because basically the deal with sales tax is you collect the sales tax from the customer. So it's kind of revenue because, it's money coming into your business. So 7/12/27. So I'll put the 7/12/27 there. So that is revenue, so the total that came into your store was 16,472. And that should match right here, the 16,472. So that is revenue, but either on a monthly basis or quarterly or annually, whatever your sales tax agency for your state told you, you'll need to remit that sales tax to the state. So you collect $712, but then, in a month or quarterly or whatever, that $712 is going to be paid to the state. So kind of the simplest way to track that is just to call it revenue, but then let's say that this month you pay it. You'll notice here in the other expenses section, there's a sales tax expense. And let's say that, you paid it in the month of June. You're just going to pay out that 7/12/27, paid to blank state tax commission on June 20th, 2020. So if you look at the P&L now, you'll see that there's the sales tax revenue in, and that gets included in your total revenue, but then you have sales tax going out, so it basically is a wash. It's a net sum of zero as far as your profit goes. So that's basically all I would do for the revenue section. If you have other types of revenue, you might have a cash back card. We really like the Capital One Spark cards because they give 2% cash back on everything. There's no categories to worry about, any of that jazz. It's just 2% cash back, period. So we typically have, a few hundred or even a couple $1,000 of cash back revenue each month. Let's just say you had $100. And again, you can just cut, if you're just entering transactions for the month, I would just copy June 2020 all the way down and just, if you end up not using all of them, you can just delete them, and that's pretty obvious. Okay, so that's it for the revenue section, and you'll notice that the P&L is just auto-generating as you enter transactions. Like I said earlier, it's kind of a double if statement where it looks at, is it the right month based on the month you've selected here, and is it the right account? And if it is, then it's going to pop the numbers into there for you. You'll notice cashback revenue of $100 right now, but if that month gets changed to July, then that $100 went away because it doesn't meet the criteria anymore. So this auto generates, and you don't have to do a thing in this P&L section except change it to the month you want it to be. There's our $100 in the month of July. So I'm just going to go ahead and change that back. So now let's talk about the next section of the P&L, which is the cost of goods sold, or COGS section. And that's made up of, primarily it's going to be your product costs, but then any kind of shipping costs to get the product shipped out to customers. If you're using a fulfillment center, or you've hired your son or daughter or the kid next door or whatever, and you're paying them $1 per order to process orders for you, that's what fulfillment costs would be. In most cases, this is going to be the fulfillment center. Our number one choice is expert fulfillment. Just your invoices, how much you pay to them. And then last thing in the cost of goods is your merchant fees. That's the credit card processing fees that you pay as revenue comes in. So let's talk about this section. And right off the bat, we need to, again, specify what type of store do you have at this point in time. If you're completely drop shipping right now, meaning that you don't stock inventory yourself, when each order goes out, you just get invoiced by your supplier, and you just pay X amount per shipment that goes out. If you're just paying your supplier for each shipment as it goes out, aka drop shipping, then basically your product cost is just going to be what's the grand total you paid your supplier this month or suppliers this month. And so, even if similar to what we did with the revenue, it would be very painstaking to say, okay, it was $20 for this order and $10 for this order and 5 and 5 and 8 and 20 and so on and so forth. Kind of just a waste of time for all that data entry. What I would do is just say, look at my credit card statement and what was the grand total I paid my supplier this month. Oh, it was $3,512.18. And I would just record that was my product cost for the month. And you'll notice it just popped it into the product cost section there. So very simple if you're using the drop ship method and just paying your supplier as orders ship out throughout the month, or even if they batch it and invoice you once a week or once a month or whatever. Bottom line is you're going to record as product costs what you paid your supplier that month. Now, if you are if you are purchasing inventory from your supplier and either stocking that inventory at home or using expert fulfillment or some Amazon FBA, whatever it is, if you're buying inventory and then shipping out orders from your stock of inventory, then you're not going to want to just record your purchases here. That's going to really skew your P&L, because purchases of inventory are not expenses. When you purchase inventory, you're actually just switching out one asset, cash, for another asset, inventory. And sorry, I'm getting kind of accounting-y on you here, but that's a non-transaction as far as the P&L goes. That's a balance sheet transaction. You changed out cash, which is an asset, for inventory, which is also an asset. So there's no impact on the P&L. So that's all I'm going to say right now is if you're buying inventory and fulfilling from your garage or fulfillment center or whatever, do not enter do not enter purchases as a product cost here. At the very end of this video, we're going to talk about how to use this whole inventory tracking system and how to calculate what your product cost was for each month. And then you'll pull that into here, but you're not going to want to enter your purchases here. Okay, so we talked about product costs. Now, outbound shipping costs, if you're just buying, if you're using ShipStation or Stamps.com, or, oftentimes shipping costs if you're using a fulfillment center, those are just going to kind of be included on your fulfillment invoice, and you can separate them out if you want. You can put them all in one account if you want, doesn't really matter. But shipping costs is referring to outbound shipping costs to get the products to the customer. And fulfillment costs, like we've talked about, that's expert fulfillment or Amazon FBA or what you pay your daughter to process orders for you. Merchant fees, well, before I go into that, so basically same thing here. I would just do a single entry for the entire month. It was $850 for $851 for shipping costs this month. And to pay my daughter, she fulfilled 142 orders at $1 a piece. There's the 142 bucks. So again, for all of this, I would just do one entry, one line, and put the sum in for the entire month to keep it as simple as possible. Now, merchant fees, you are going to have to estimate. And the reason, you don't have to estimate, but to do this quickly each month, an estimate is going to get you within a few bucks, plus or minus 10, 20 bucks, and that's good enough for me. I really wouldn't spend hours and hours and hours trying to track down every penny and know exactly what my what my merchant fees were that month. You can, and your merchant statement may tell you exactly what it was that month, and you can just use that number. But I think an estimate is good enough, and it's pretty simple to calculate. Let's say that you're on the Shopify advanced plan, which is I'll just do some make some notes here. That's the $79 a month advanced Shopify plan. Now that plan gives you 2.6% transaction fees plus 30 cents per transaction. I should have entered a... Okay. So to estimate it, you're not just going to say it's 2.6% of revenue, because it's not. It's 2.6% of revenue plus your transaction fees. And what's important there is you need to know what your average order value is, because if your average order value is $1,000, that 30-cent transaction fee is tiny. You're paying 30 cents for every $1,000 of revenue, so it's 0.03%, and has hardly any. It makes your 2.6, it makes it 2.63. If, on the other hand, most stores are going to have an average order value of, let's say, $30-$40, let's just use 35. Now that 30-cent transaction fee on a $35 order raises your overall merchant fee by almost a full percent. So it would be 2.6 plus another 0.86. So you're looking at, right around 3.5% merchant fees. So over time, you'll become familiar with what your merchant fee percentage is. I would just estimate to the nearest tenth or so, and here's our gross revenue number times that 0.35%, and that's it. Like I say, that's going to be plus or minus $10-$20 of what your merchant fees actually were that month. So I'll select that there, and you can always make notes of everything. You can use this subscription notes column to make notes. I would just say of the B or of the C2 amount. You can use this subscription notes column for some basic notes. If you want to add additional notes, just right click and insert an additional note, and you can go to town with what kind of notes you want to enter there. Okay, so that gets us through the cost of goods section, and now advertising is going to be very, very simple. The way I like to keep advertising costs, because most of these bill you on a periodic basis. Google Ads, for example, depending on your account settings, your billing threshold might be $500 or or a minimum of one charge a month kind of thing. But very rarely is it calendar months. It might run from the 16th of one month to the 15th of the next month, and then it bills it 5 days later or 3 days later or whatever. Just kind of weird timing wise. So what I like to do for the advertising cost section is just go to Facebook Ads Manager, choose your date range of June 2020, and if it says your grand total Facebook ad spend for that month was $6,123.18, then that's what you enter. Now, you may have been charged this month. If you look at your credit card statement, you may have been charged $6,000 even, or $6,800, or it's going to be plus or minus a few hundred, just because of the timing of when periods closed and when that got charged to your card and everything. But it's really more accurate to say what was my actual ad spend during that month, regardless of how the billing worked out. Google, you log in and say, okay, it was $1,000. Well, highly likely it's going to be exactly 1,000, but whatever. Microsoft was $342, and Amazon, let's say we're not on Amazon yet. And I'm recording a video, so I'm not thinking clearly right now. I do not want to enter those numbers right here. You may have been thinking that as I was recording. I got carried away with my examples and stuff. You're never going to enter stuff here. In fact, I'm going to protect this sheet so it's impossible to enter numbers here. So you don't have to worry about making the mistake I just made, but I was kind of too focused on sharing my examples. I'm never obviously going to enter stuff here. I would select the accounts here. Here's my Facebook ad spend, my Google ad spend, my Microsoft ad spend, and I'll enter my numbers here. and it auto-populates them here. Okay, so that's it for the advertising section. So now there's just other expenses, and you'll become familiar with what these are from month to month. Typically they don't add up to a ton unless you have a lot of labor costs, you've hired virtual assistants or whatever, but usually you're going to have your Shopify subscription and any apps. You're going to have a handful of other subscriptions, MailChimp and Phone.com, and certain apps that are billed outside the Shopify system. One-click upsell, for example, is billed separately. But anyway, a handful of other various expenses here, including sales tax, which we talked about earlier. But here again, what I would do is I would look at my bank statement for that month. I would look at the credit card statement for that month, and I would highly advise don't commingle stuff with your personal expenses. Don't use your personal credit card for all this stuff. Get a business credit card, even if you don't have a business entity set up. Get a separate card, even if it's technically a personal card, and use that card for this site and only this site. Don't use it to go out to lunch and all your personal stuff. Have a separate card, a separate bank account, so that you can log in to your monthly statement, your online account, look at your transactions, and know every transaction on here is related to the business. So like I say, I just look at your monthly statements, through your online portal or your mailed statements or whatever, and just tally everything. So let's say that Shopify billed you twice during the month. You could just enter, okay, here was my $79 charge, and then all of my apps were charged separately and added up to $38.95. Okay, so there's your Shopify. And okay, for my subscriptions, and here again you can use notes to keep track of everything if you want. My MailChimp was $29 and my Phone.com was $15.30, and so on and so forth. You can use notes here to keep track of stuff, and then just sum it here. But there's all your subscriptions, so on and so forth, just straight from your credit card and bank statement, PayPal statement, if you're charging anything through that. But you'll see here that with a grand total, you might have 3 or 4 more than I have here, but you're looking at a grand total of like 14 rows for all of your transactions that entire month. And just by entering the correct month here, the correct account here, like we've talked about before, that P&L just auto fills for you, and okay, I made $3,773 this month. Great. Now, once, like we talked about before, once you've double checked, okay, I've entered everything from my credit card statement, everything from my bank, everything from PayPal. You've kind of looked, okay, what did I have in prior months? Oh yeah, I've totally forgot to put in my VA labor. So you go back and you enter your VA labor. Let's say you paid them $300. Got to select the right month here. Once you know that this is complete and you've entered everything, like I said, what you're going to want to do is just copy. So we're starting with this gross revenue line. I'm going to go down to the bottom, and I'm on a Mac, so Command C. I'm going to copy that, and this is June, so I'll go to the June column, and I will right-click and paste special values only, and it entered. It just entered everything here. And the reason, like I said before, that you have to do that right-click, paste special values is if I would have, let me show you in the next column what would happen if I did a regular paste. If I just did a Command V and pasted that in here, that is not what I expected to see. Maybe I have it set up. Yeah, I do. Well, I do have it set up like using dollar signs, so it's using like absolute cell references. The problem you'll see is that it's still it's not numbers. See, if I click into this cell, you'll see that it's numbers, 15918.27. 158. These are actual numbers, whereas these are formulas. So the problem is later on, next month, when I say, okay, let me see the July P&L, now all of those are zero because I haven't entered anything for July yet. But eventually there'll be different numbers, obviously, and these are still cell references rather than actual numbers. So that's why you have to do the paste special. Okay, so let me check my notes here and make sure I've said everything I want to about everything we've covered so far. All right, yeah, I think we are good. And again, like I talked about, this looks wonky right now because there's just dummy data in there, and these zeros example I just did. But you'll see that as I go in and paste additional months in here later, you'll see that it is just automatically showing us our revenue trend over time, and automatically, just based on what's up in here, up in this section, it's automatically putting this monthly net revenue graph together for us. And then here's our return on ad spend, which looks weird because of the zeros and stuff. But anyway, it's kind of slick that these all auto-calculate, and you don't have to create the charts or do anything. You paste special in the numbers here once each month is closed out, and this is just auto-generated for you. So that is as far as you need to go here if you're drop shipping and you're just paying your suppliers as as product ship, and the invoices come in and they charge your credit card, or you send them a check, or however you do it. If you're drop shipping and just paying your suppliers as orders are fulfilled, then you're just going to do exactly what we've shown you, and you're done with this accounting bookkeeping video. For those of you who are buying inventory and using a fulfillment center, or you are your own fulfillment center and you need to track your inventory, we're going to go ahead and start talking about that now. To the rest of you, goodbye. Okay, so inventory tracking. Like we kind of talked about before, you're never going to want to just enter your purchases. Like if I spend 20 grand this month to get a whole bunch of new stock on the shelves, you'll see that that's going to wreak havoc on our P&L here. It's going to look like, okay, you had revenue of 16.5. Oh, my cost of goods was 21.5. Advertising, oh man, I lost $13,000 this month. Well, that's not true, because you just bought inventory. You traded cash for another asset, inventory, which is on the shelves. You own it. That's not an expense. That was a purchase of an asset. So that's why you're never going to enter. I'm going to blank this out. That's why you're never going to enter purchases here in the transaction log. What you are going to do instead is enter purchases in this purchases column. So let's say that you started your business June 1st. We're just going to keep this really simple. Obviously, the day you started, you have zero inventory on hand. And let's say that during that month, you purchased $10,000 worth of inventory. Again, what I would do, if that was in 2 or 3 or 10 separate transactions, you can use a note and say, okay, on June 3rd, I bought, it was $5,000 for SKU 123, and then on June 12th, I spent another $2,000 for SKU 124. And then on the 28th, I spent another $3,000 for SKU 125. You can use the note here to keep track of those separate purchases, but bottom line is you're going to enter total inventory purchases for the month here in this purchases column. Now, one question we get a lot is, okay, how do I deal with shipping charges? To get the product from the factory to my fulfillment center or my house or wherever it's going to. In that, we refer to those shipping charges as inbound shipping costs, because that's getting the product to you to your in-house fulfillment center. So that's inbound shipping, and you're going to include that. So, of that 5,000, it may have been 4,200 for the product and another 800 for shipping, but grand total is 5,000 to get it to you. So include inbound shipping costs here. Now, I kind of jumped ahead of myself like I'm prone to do. I wanted to, before getting into the data entry here, I wanted to show you kind of this formula. It's pretty simple, but your costs for the month, your product costs, is simply calculated as, and I'll just enter it here. Your cost for the month is your beginning inventory plus purchases made during that month minus your ending inventory. And you'll see that that's all we're doing here with these 4 columns. Here's your beginning inventory plus your purchases minus your ending inventory, and that's going to give us your product costs at the end of the product costs for that month. So let's say that let's see, we need we don't know what our cost of goods is yet. Let's say our ending inventory was $5,000. We had 0 at the start of the month. We purchased 10 during the month, so now we have 10 on the shelves, but then we ship stuff out throughout the month, and now as of June 30th, end of day, now there are only $5,000 worth of products on the shelves. Well, 0 plus 10 minus the 5 tells us that our product costs for the month were $5,000. Maybe I should have used a different number. Let's say we have 6,000 left on the shelves. Okay, 0 plus 10 minus the 6. Okay, we actually sent $4,000 worth of product out this month. So that is our expense. So what I'm going to do, like I said, you're never going to enter purchases here. What you're going to do is take your product costs final number here from this section and enter that. If you want, you can even just do an equals and pull the number from there directly, or you could just enter the 4,000 manually. But this is, and I would even make note, for June I had 0 beginning plus 10,000 of purchases minus 6,000 of end inventory equals the 4K cost of goods, product costs. So I can make notes for myself here, but that's what you're going to enter into the transaction log, is this number from column P, the product costs number. Now, the only thing we haven't talked about is, okay, it was nice for me to just pull the 6,000 number out of my mind, but how did I get that? Well, that you are going to get by filling out this month-end inventory count section down here. So I'm going to say, okay, June 30th is when I'm doing this count, and I log into Expert Fulfillment. I go to the on-hand, on-date report, and I say, okay, SKU 123, SKU 124, and SKU 125 are our SKUs. And the inventory on-hand, on-date report is going to tell you, as of this date that you enter, you had 26 of this SKU on hand, you had 23 of this SKU on hand, and let's say you had 100 of this SKU on hand. So these parts are easy. These are just a list of your SKUs. Obviously, these are simplified numbers. They won't look like that, but here's my list of SKUs I get from the Expert Fulfillment report. Here's how many I had on hand of each SKU as of that date, using the on-hand, on-date report. The only tricky part of this is, what is my cost per unit? And remember, up here we talked about how you need to include inbound shipping, the shipping costs your factory charges you, or you might pay separately. By the way, you would also include any custom fees that you paid. So let's say when it landed in America, if that's where you're shipping it to, you had to pay $400 of custom fees. Well, you would include that custom tax there as well. So bottom line is, you're going to consider a purchase everything it costs to get the product on your shelf at the fulfillment center or in your garage. And so since we're counting the shipping and custom type charges here, we need to calculate them here as well. And that can get, it's not rocket science, but it can get a little bit tricky. And notice I've highlighted the fields gold here, that you're actually going to have data input. And I'll protect these cells too, so you can't mess up the formulas even if you want to. But that gold is just kind of nice, though you're only going to enter stuff where there's gold. But anyway, to get to your cost per unit, you're just going to have to do some simple math. Let's say that when we place this order, let's say we bought 500. Let me just kind of paste down here this is what our purchase looked like. Let's say you bought 500 of that item, 300 of that item, and 200 of this item. And you're going to know, okay, my cost for each of these items, you just look at your invoice, my cost for this SKU was $3.20 per item. And my cost for this one was $4 an item, and my cost for this one was $2.88 per item. That's easy. But on the bottom of that invoice is going to be shipping of, let's say, $698. What are we going to do with that $698? Because that's a very real cost, and we're not going to bother to do it twice, but we could do the same thing with a $450 custom charge. We need to account for this money. What I would do is just say, okay, $698 to ship all of this in. Well, I have 500 plus 300 plus 200. I have 1,000 units total. And I'm messing up my formulas here, but whatever. I have 1,000 units total, so I'm just going to say, okay, well, that is 69.8 cents per unit. So what I would do is just go into here and say, okay, it was only $3.20 per unit, but I need to add an additional $0.698 or $0.698, 69.8 cents per unit to cover my shipping. And same thing here. I'm going to come in and add the 0.698, and I'm going to come in here and add the 0.698. And that gets me a more realistic, shipping inclusive. And like I said, we could do the same thing with a custom charge. That gets me a true all-inclusive how much each one of these units actually costs. Now that's a simplified way of doing it, is just taking your total shipping divided by your total units for that order. You could make it more complicated than that. Let's say these are big, heavy buggers, and these are sheets of paper that hardly cost, anything to ship. You could allocate that $698 any way you wanted to, but bottom line is you need to account for that shipping cost, those custom taxes. You got to account for those costs in your cost per unit. So that's really the only tricky part of doing your month-end inventory count, is accounting for, calculating what is your true, after shipping, after customs, after everything, what is my true cost per unit to get each of these items on the shelf ready to be shipped out. You might have packaging that you need to purchase for this one, but not this one. So there are going to be different things to allocate, but you just need to make sure that these are true all-inclusive to get the product on the shelf. So once you've calculated that, like I said earlier, your on hand on date report, or you're going to go out to the garage and count, okay, this box is full, it has 100, this box is full, it has 100, okay, this box is half used, you go through and count them, I have, 38 on hand, okay, there's 238 of this on hand at month end. And obviously if you're doing it yourself, if you're fulfilling yourself in your garage, you need to actually do this as close to month end as you can to get an accurate count. If you're a day or two late, not a big deal, it's just going to kind of shift some of the costs from one month to another, but try to get this as close to month end as you truly can. So the once you've done this inventory count, we've already talked about this, but let's just mention it one more time. Now okay, my grand total inventory on hand at month end is 4209. That's what you're going to plug in right here, is that 4209. And then it calculates, okay, that means your cost of goods, your product cost for this month was 5791. And you would just pull that number in, and your P&L calculates. So hopefully that is everything you need to know about this. Like I said at the beginning of the video, there's a whole lot more. We could do a 20 video series on accounting and bookkeeping, but for 95%, 99% of store owners, this is going to be pretty sufficient for you, especially in your first year or two as you're kind of ramping things up. And you can always graduate from this to using Wave apps or using QuickBooks or some other accounting software, but this is a pretty slick and you see pretty fast and easy. I mean, I was talking throughout this whole video, but you could really probably do all this in less than an hour at the end of each month for accounting. So this is Coach Kevin signing off.